back, and it is time now for the moment that we've been waiting for, when the Edelweiss Brains Trust will be with us to give us their views of the Indian macros, micros and markets. Let me welcome Rashesh Shah, Chairman and CEO, Edelweiss Group, Vikas Khemani, CEO, Edelweiss Securities, and Nitin, Jain, CEO, Global Asset and Wealth Management at Edelweiss. Gentlemen, thank you very much for joining me. Well, Rashesh, let us start with you. You come at a very auspicious time for Mamta, Jaya and to some extent NDA, because the BJP victory in Assam. How does all this change the terrain for laws for GST?
I think first of all, the good news is that the results are more or less on expected lines. So there is no fresh bout of uncertainty and chaos that usually happens. Along with that, a lot of us do believe that getting elections out of the way will allow the government to focus back on getting GST and other bills passed. And actually, it's very interesting. I think the current session that ended was one of the most productive session in Indian Parliament over the last 3 years. So I think things are starting to get done, and now that the elections are out of the way, a lot more things which are in the pipeline will also start getting done. And I do believe that some of the marginal parties who are not overtly supporting GST will, now that the elections are over, will find the courage to come out and openly support it. And with Congress also, you know, I think weakening after these elections, it will give a fresh impetus to BJP's effort to get the GST passed. And overall uncertainty has come down. Results are as per expected line, so not bad.
Okay.
How much of a trigger is GST, Rashesh, if it does go through and, you know, by the end of the year we see it culminate into something formidable? How much more of a trigger, how much upside can we see on the Nifty?
I think on the short term, it will be a great impetus to the sentiment and the momentum, because then it will reinforce the hypothesis that this government can get stuff done, especially structural changes done. I do think that the bankruptcy bill that got passed was as big as GST itself. Since we did not go through a lot of chaos and back and forth on that, it didn't get, you know, built up as much. But I think the bankruptcy code was a big one. I think the real estate bill is fairly big, because ultimately housing is what affects everybody, every individual in this country. So I think real estate is a big one, not as much appreciated. The bankruptcy code is a big one. If they get the GST done, so there'll be a short-term, very good psychological boost. In the medium term, there'll be a little bit of chaos, because there'll be adjustment, and from state to center, there'll be, you know, the entire administration structure and all that will have to change. So you might have a few quarters, 3 to 4 quarters of a little bit of chaos. And then after that, I think it's going to be a huge plus, because for the first time we'll see one Indian market. And you talk to anybody in the manufacturing sector, for them this is a big plus.
Absolutely. But before we come to that, we have a global cue to tackle today, with the Fed minutes indicating a possibility that the June rate hike is back on the table. So Nitin, Jain, that's more to you. The Indian markets have not fallen as much as other Asian markets, but they have fallen. So the Fed still rules the mind space. What is your reading of what FIIs and hedge funds might do in the next 3 months?
So the segment that actually I end up interacting with is slightly different. They're not the hedge fund guys, right? Because we go to the pension funds, we go to the sovereign wealth funds, basically long-term, very long-term money. And it's interesting, for the last 2 years now, I've only heard positive sentiment about India from this set of investors. Okay. And, you know, it's also true in a way. If you can think 10 years and more, and you think where to invest today in the global arena, I think there are very few countries that you can pinpoint, and most of these guys have been evaluating us very closely. If you see the numbers also, you would see that the FII numbers, which is possibly the hedge fund money and the mutual fund money coming, that's been quite volatile. But the money which comes as FDI, where probably the source are these funds, that has gone up significantly, and I think that flow is there to stay.
Okay, but what's the thesis behind that? Say 10 years from now, what is the trigger that we're looking at?
Tons of.
I mean, not 10 years from now, but a more near term.
Okay. So I think when, as a global investor, you look at some of these things, there are big themes that you have to identify. In the last 20 years, if you see, all the commodity producers have done extremely well. And this cycle, we think, has turned. So there will be a serious amount of wealth transfer that will happen from commodity producing companies or countries to commodity consumers. That is one big theme. You add to that the fact that the demographics of this country, the average age is 26, 27. The per capita is 1800, 1850. The government is in good shape. I think there's a lot of confidence on the current governor. And when you read headline 7 quarter kind of growth, and you look at it vis-a-vis other emerging markets, that makes for a very compelling argument.
We'll come back to that theme, especially whether GST will play magic. But I can't resist this question. If the governor is not continued, will that be very bad?
Well, I think there is consensus globally that he has done a fantastic job, and it would be kind of a dampener for some people. But these are institutions. I think RBI is now an institution. I personally don't think that is such a big decision from a long-term point of view from investors. But yeah, in the short term, maybe it might have some impact.
Because how are you reading the immediate run in the markets? We have these global cues today, which at the moment look a little sobered down. Is the near-term range likely to get disturbed? 7770, 7950, and if yes, in which direction?
So I think clearly markets recovered from first quarter fall and kind of became stable post last time when central banks came around and brought sort of comfort into the markets. Now I think if you see, domestic indicators are all kind of doing well in right direction. Results are kind of fine. I think the key thing has to look at from what will happen from the global indicators. And if you look at next month, there are two big events. One is the Fed, and secondly the Brexit. And I think these two are fairly significant events from a global markets perspective. And typically markets having rallied, and whenever there's an uncertain big event ahead of you, typically investors tend to sort of take some money off or hold back or kind of, so I do feel there could be possibility of a little bit of correction ahead of the event, and then it will really depend on how the event outcomes are. So I think the kind of calmness we've seen in the markets over the last 1 or 2 months might not be there in next month. And, but domestically, I must say that even if you look at the quarterly earnings and all, by and large, things are on the margin on improvement. And hence, I continue to believe that if any sort of significant correction because of the global event happens, that will be a great opportunity for investors as far as the Indian markets are concerned.
Let me make a personal observation. When we did a Edelweiss dealing room check, was it late Feb? No, was it late Jan or early Feb? No, I think it was late Feb, towards the budget time. Vikas was genuinely nervous. I mean, although it was one of our colleagues, I don't know whether it was Rima who went came over to speak with you, we could sense it that Vikas is not at all happy with the stock markets. Do you think that visit to 6,800 at least is off the table? You seem to be sensing it on that day.
It looks like that. I don't think, that kind of same global environment probably will revisit again in this year, because I think there's a lot more coordination among the central bankers, and I mean, one can't predict global macros very precisely, but looks like that it will not be the case. This again, whenever there's a unpredicted event takes place, that time the reactions are knee-jerk. Yeah. But these both events are in some sense predicted. There is a sensitivity. Markets are expecting possibilities. So those kind of things then don't happen. So I would say it will be probably a marginal kind of impact.
Okay, I can't resist this question. Punjab National Bank went up, and it was up 2% post what was the largest loss that they've recorded on a quarterly basis. Do you think that the market is factoring in maybe the worst is over for PSU Banks, and now Q1 FY17 onwards it could be better? And would you be a buyer in PSU Banks?
So they're just saying that when markets, or stocks stop reacting negative to the negative news negatively, it's good, and vice versa. But I think the larger point, I think in this current exercise, if you see most of the PSU banks, the broader theme seems to be in place that one-time cleanup. Let's get the worst out and get the banks sort of, back on track. So I think this seems to be part of a coordinated plan, according to me, by government, by RBI, by the managements of the bank. And this obviously, cleans up once and for all, and then banks can go back on a kind of trajectory. Obviously, it will take some time for them to resolve the kind of asset quality which is there sitting on the banks. But I do believe that it puts lots of uncertainty behind. and that will give a lot of comfort to investors. You can factor in whatever. Otherwise, investors anyway were factoring in their own estimates.
Yes.
About the asset quality. So might as well give whatever is there and get done with it. And I think it seems this will trigger for some sort of consolidation within the PSU bank. This will create a trigger for broader game plan going forward. So I think, in my opinion, this is all part of a well coordinated strategy, and it is in good, good for long term perspective. Now you can get banking sector, which is very, very critical for the overall economic growth. And like Dr. Rajan has been saying, that you can't create a growth in an unstable kind of environment. So you have to get stability.
Okay.
Yeah, the only thing I would add is, if you go back to the US, when they did the stress test of their banks, they actually drew the line in the sand and growth came back after that. And all the uncertainty around banks ended. I think the AQR process of RBI was India version of the stress test. We did it in our own way, but I think it started this repair job that is underway right now.
Okay. We didn't put it that way, but the reason for inviting you was to assess the 2 years that went by. But what I am getting from you is a very positive report card, one that a significant amount of decent path-breaking legislation has been passed in the past 2 years, and GST is almost here. That the FII sentiment for the past 2 years has been extremely positive on India, and that earnings-wise as well as market dynamics-wise, it doesn't look like we are going to revisit 6,800. So just give us a grading. ABC for 2 years?
I would say A. I would say A.
Vikas?
Clear A.
Follow the leader. Okay. Nitin?
Resounding A.
Okay, that's a triple A from the Edelweiss desk for 2 years of the Modi government. We'll do one thing. We'll take a break. Thereafter, it's not macros and it's not assessing the government, but we get down to stock strategies as well as sectoral preferences from the Edelweiss team.
Welcome back. Well, for the Nifty, 7850 is currently where we're holding. So no sort of gyrations or further kind of weakness that we're seeing on an incremental basis at this point in time. We're down around 0.3%. But we are in conversation with the entire Edelweiss Brain Trust. So let's continue our conversation. Nitin, wanted to talk to you about what's happening in the global commodity and the currency space, because we've seen emerging markets such as Russia recover this year. There's stability which has come in oil prices. There's stability come in other commodities as well. But the rupee is now at a 2-month low. Is that something which might deter foreign investors, that maybe we are a little uncertain about where Brent crude is headed, where the rupee is headed?
Actually, it's very interesting that last year, if you saw the Russian markets, the Brazilian markets, in fact, essentially all the commodity producers were down anywhere between 50 to 80% if you adjust for the currency, sometimes even higher. And whenever something comes down so sharply, people are obviously expecting the worst. And when the worst does not pan out, you can expect a natural bounce. So if you see this year, for the year, I think from that base, most of these markets, again adjusted for the currency, would be up 30 to 40%. Okay. So in the short term, you can say, yeah, those markets have done well. But anybody who has looked at a 1.5 year, 2 year, 3 year chart, they would tell you that things are in still pretty bad shape. And I don't think it was unexpected because the markets are down so much. It has made incremental, especially the more speculative money, move into those asset classes. As I was saying earlier, there are pockets of money, right? There are ETFs, there are hedge fund money, then there's this long-term money. This long-term money, I don't think is going to take decisions based on that. But this hedge fund money and maybe some part of the ETF money, there might be some tactical change in allocations.
Okay. Well, I do want to talk sectors. Rashesh, would you say this is a recovering economy? So are you going to metals? Are you going to public sector banks, or at least the big lenders, maybe the ICICIs and the Axis, if not PSUs? Will you start betting on a recovering economy?
I would strongly feel that India is coming back, and I think all the things government has done, and hopefully we have good monsoons, things will come back. But I think the idea is to focus on the non-tradables rather than the tradable sector, because the global overcapacity like steel and metal and all will still continue to act as a overhang for the tradable sector, because tradable sector will be driven by global sentiment, and I think global sentiment is still fairly bad. Global overcapacity is very high. So anybody who wants to really bet on the Indian recovery should focus more on what we call the non-tradable, which will be services, media, maybe EPC and those contracts. I think things like defense will come back, because defense will be an India industry. So I would really bet on that. I think EPC is coming back as the road projects and a lot of construction.
There are not too many healthy balance sheets.
There are not too many of them, but the ones which are healthy or the ones which are getting repaired are actually seeing a huge amount of work coming there. I think the same thing in financial services, there is a huge amount of growth. I think housing is coming back very strongly, and with the real estate bill and all, on the medium term basis, the impact on housing as a sector, both housing, the actual buying of housing and the housing finance part of the opportunity.
Usually
is going to be very strong.
Rule of thumb is that real estate prices should really break down at one point in time for the sector to really bounce back. We didn't see such a breakdown of prices. We saw stagnation. In spite of it, you think that the real estate sector is now bottomed out?
Yeah, because actually it did not create a bubble also. So if you see, and thanks to RBI's actions and all, they really applied the brakes very early on. And with this global liquidity that is there, a real estate sector breaking down and completely collapsing is actually very unlikely. But if you look at house prices have been stagnant for the last about 5 years, and with whatever inflation we have, 5 to 8%, in real terms it has got cheaper. And with all the effort with the real estate bill and everything else, the cleanup of the sector, the elimination of black money, all of that, I think housing will get more and more affordable. And if interest rates also come down, then from a housing finance point of view, it becomes even more affordable. And I think all these are the kind of opportunities investors can strongly look at.
Okay. Vikas, I wanted your thoughts on these focused concept stories which are now coming up from the IPO market, especially Thyrocare, best subscription ever since 2007, 2008. The others, Dr. Lal's, Ujjivans of the world, Parag Milk Foods, good response today. Are you a subscriber to any of these concept stories? Would you choose one of them? Would you recommend one of them?
So I think what has happened in the last 12 to 18 months, as the Indian economy is sort of expanding and consumption is increasing, the newer kind of stories are coming to the markets, which were not there. So earlier, if you look at healthcare, there were hardly 1 or 2 plays, while it's a large market, but there were 1 or 2 plays. Now we have 3, 4 plays already there. Likewise, I think, we didn't have aviation in play, we didn't have dairy companies in play. So I think, but these are high growth sectors. So I think through IPO process, lots of these interesting large companies sort of come and, are hitting the market, and they are now available for investment by the investors. So I think undoubtedly you can't broad brush and say all IPOs are good to invest and all, but I think some of these interesting names in new segment, emerging sector, which has huge long growth, lever left over next 10, 20 years, they will become fairly large companies. I mean, healthcare, we have just started, we've scratched the surface. Dairy, we've scratched the surface.
Absolutely.
Insurance, it's like just a sector we don't have any play, which is pure play listed company. It's a huge play, going forward. You will see this year, I mean, 3, 4 large big companies will be hitting the market, and this will be again great opportunity to participate in the significant wealth creation over next 10, 20 years. So I see IPOs as a great opportunity for participating in the wealth creation of the which is part of Indian economy. I mean, just let's see how all the banks which hit public went to markets 10 years ago, 15 years ago, they have created significant wealth for investors, right? So I feel that we are in that phase where all the big sectors which will be next 10 years, 8, 10 years down the line, you are seeing some of the great ideas, stories hitting the market now.
Okay. Actually, your last sentence was, if interest rates also fall, that will be the icing on the cake. How much would RBI cut, you think? But more importantly, how much will money get cheaper for an SME or for a borrower?
I think it's...
Will that be more for the borrower?
I think it's an important question. Is not just the cost of funds, but the availability of funds. And I think cost of funds getting cheaper will make it easier by getting the economy a lot more, kick-started, lubricated, and that makes it much more impactful for SMEs, because SMEs depend on economic activity a lot more and the velocity of money rather than just the cost of money. But I think interest rate will be psychologically a big, impact. And the two big investment sectors in India, housing and infrastructure, they both happen to be a lot more interest rate sensitive. Yes. If you're going to put up an infrastructure project, and if your cost of funds is 11 versus 13, makes a huge difference, because these are 30-year projects, and a small change in interest rate can affect the viability of that project. And the same thing in housing. So because I think everybody buying a house with a 30-year view. So housing and infrastructure are truly long-term investments, and their interest rate sensitivity is a lot higher. So I think even a 40-50 basis point cut will have a huge impact, because it will kickstart a lot of activity, which will have spin-off benefits for the SMEs and everybody else.
Okay. Nitin, net, how are you expecting FII behavior? I mean, you said that sentiment has been unalloyed and good, but there have been large swathes of, FIIs not buying and even selling out. Now with probably the GST in, and let us assume the GST is in, because the numbers seem to be favoring the government at this point in time. Will that be path-breaking? I mean, should we see a rush of funds?
So I think when you start looking at these numbers, the first thing that one should do is probably say FII plus FDI. So don't look at the FII number in isolation. I continue to repeat that, because there are very different investor types who are coming through one route versus the other route. As a sum total of this, I do think you would expect a very steady stream of money coming to India. And I think there will be acceleration actually this year, because the number of people that I'm meeting now who are actually looking to make their first ever investment in India is remarkable. Most of these people have no exposure. They're coming to India for the first time, talking to us, understanding the stories, and they do take 2, 3, 4 years before they start to make commitments to a country. And I think now we have reached a stage, not only us, but there are few of us where we are looking for partners to come in different forms and formats to allocate capital to India, and I do think that will actually go up significantly. And all the stuff that Vikas has been talking about, there are so many sectors which are doing extremely well. It just gets hidden because 65% of Nifty, which is the headline index for markets, is actually linked to global trade and financing of that global trade. So if you take that out, the 35% of the index is doing very well. So the money that is coming in is also very specific, or it's linked to specific opportunities now. Money is not coming in to large cap funds or to Nifty or stuff like that, but people are saying there are credit opportunities. Why don't we make a big play in the credit opportunity? There's a play in the distress opportunity. Why don't we come into the distress opportunity?
Yes.
There's an opportunity in infrastructure. Why don't we form a JV with somebody and invest in that opportunity? So money is coming in that route, not really necessarily through the index route.
Okay, well, that's on the macros. I'm going to do a coffee with Karan rapid fire now, and you all have to answer in monosyllables. Vikas, what is the high for the index in 2016? Or 1 year down, if you want a 12-month guess.
I think it should be at least 15% up from here.
Okay.
in 12 months.
If you got 1 crore is a small number for you, Rashesh. If you got a 10 crore, to spend in a month, which shares?
As I said, financial services.
When you financial services is like 35% of the economy. At least give us in that. Will it be small private banks, NBFCs?
I would look at the private banks. I would look at housing finance companies for sure. And I would, if there are players available in asset management, wealth management, because I think even that is becoming a rapid growth area in the financial services.
You'll buy your own shares, is what you're saying.
Well, that we are always happy to do. But outside of that, I do think that the financial services itself is at a very big inflection point, and a little bit of interest rate cut, the economy coming back, there'll be rapid growth available to us because of two things. I think global banking is going back home, so we are seeing the shrinkage of global banks in India. And global capital is becoming global. What Nitin is saying, a lot of the large pension funds and all want to come here. And finance also needs capital. So we have the opportunity, the capital is coming, and some part of the competition like global banks are going away. So there is a very big, opportunity that is getting created. Outside of that, I would invest in the new consumable, the aviations and the...
Interglobe has entered your model portfolio.
Yeah, it is because we think aviation is a big one. I think when insurance IPOs come, I do think insurance will become a big, another wealth creator when all these HDFC and ICICI insurance companies come to the market. I think what happened to private banks 20 years ago could be the starting point of the private insurance companies now.
You want to ask him the rapid fire, Nitin?
Yes, FIIs net positive by the end of the year,
Definitely.
and DIIs?
DIs again would be positive, and there's a big theme that's happening in DIs. I'm sure you would know that there are now 1 crore SIPs growing at around 15-20% every year. 1 crore SIPs on an average of 2,700 rupees. So you're talking about 2,700 crores of capital coming in every year in equity markets, and hence
No questions are asked because they're just programmed to put that money in. It's been a pleasure speaking with all three of you. Thank you very much for joining us and for giving us that optimism which keeps the markets going. Well, that was the Edelweiss Brains Trust, which was good enough to come and spend some time with us in the studio. We take a break and thereafter back to markets with some trading strategies. Ashwini